If you're looking to buy or sell a home in the Geneva Lakes area, you might have noticed a pricing paradox. What I mean by this is you're seeing a higher number of new listings coming on the market, you're seeing a higher number of active listings, but we're also seeing higher prices. This is contradictory. Usually when we have more of something, the price comes down, but that's not the case. So what's causing this unusual trend? Hi, my name is Jade, broker and co-owner of Legendary Real Estate Services. Next to a nationwide housing shortage, interest rates are the next biggest culprit, putting us in the situation that we are in. And it's not bringing any relief to the economy or the people. Interest rates right now are at 6.95%, down from 7.22%. And the feds are likely going to keep it this way for at least another month or so. I like to akin the Fed's decision to a parent grounding a child for bad behavior when there are underlying health or social issues that need to be addressed first and aren't. This graph shows that there's a higher number of new listings and active listings on the market than there was about this time last year. Looking at this table of new listings, if you notice, more listings of homes in the $500,000 to $1.5 million price range are coming online than there were last year, but homes between $200,000 and $500,000, there's less of them coming online, and those are the price points that most buyers are looking for. Now look at the active listings across the board, $200,000 to over $1.5 million. They're staying on the market longer. What's interesting about this is we're still technically in a seller's market and we still have a shortage of homes. What that tells us is that sellers, we need to adjust our expectations. Gone are the days where we can get away with overpricing our home. If we want to get a good number of showings and an offer or two in, we have to price your home at fair market value, or no one's going to come and look at it. So this table shows us the median list price and the median sale price, the year-to-date change from last year to this year. As you can see, in Walworth County, the median list price is up 10% compared to last year, and the median sale price, that's up 20% as compared to last year. And if you look at the difference between the median list price and the median sale price, here in Walworth County, the median list price of homes is about $85,000 higher than what the median sales price is. In Kenosha and Racine County, it's about $30,000. So what does that tell you? It tells you that there are more homes being listed on the market that's completely outside of what the majority of buyers are looking for right now. So this table shows demand in the form of homes sold by price range. As you can see, there's a slight uptick of homes sold in the higher price range, not by much. And it almost looks like there's less demand because there are less homes sold in the affordable price range. I'd argue to say that it's not because there's less demand. I'd argue to say that it's because there's so fewer listings, and the ones that are on the market in that price range, they're not fairly priced or reasonably priced. So this table is of the number of homes that came under contract last month, which also shows demand. As you can see, across the board, it all went down, which is a tad bit alarming, especially for someone like me. But we're going to want to make sure that we just watch it going into next month and see if it's a trend or an anomaly. What could be happening is May's a weird month. Kids get out of school, people go out of town. So it just might be that influx of change and activity that has slowed the market down. So we have two simultaneous forces at work right now. We have a lot more listings for homes in the higher price range and a lot less demand. That's going to put downward pressure on listings in the higher price range. But we have less listings in the more affordable price range, but we have a strong demand, and that puts upward force on prices on the more affordable price homes. So we have downward pressure and we have upward pressure simultaneously. I'm not too worried about that just yet. As you can see from this graph, this is the US mortgage delinquencies ranging from 30 days all the way up to foreclosure. It's about the same, if not better, than it was last year. So right now, we're sitting good as far as the mortgage industry. However, looking at this graph, this is the year-over-year change in overall mortgage delinquency by state. And we've gone up just a tad bit in all but 3 states. Taken together, we're getting a little bit of mixed messages, so we're going to want to keep watching and staying tuned to this trend. As you can see, the market is rapidly shifting. There's something new every month that we're going to want to keep an eye on, trends that we're going to want to follow. So I'll bring you up to speed next month. Thanks for stopping by.